to go into a not boring case study because we know that finance is so boring and there's how you will do it that you will not be able to feel well. So we've created a hypothetical scenario here. I don't know if you can see this very sweet, romantic 5-star logo that has been designed. This is Wizkid FC. It's a football club that is about to join the Nigerian Premier League in no distant time. And these guys need, Wizkid is the owner of the club, and he needs 5 key things to start. So the first thing, he needs a stadium. And he wants that stadium to maybe be in Abuja because Abuja has land and it's also a very romantic melting point for everybody. Then he wants to hire as the coach of his club, Mourinho, right? Because a new club, he wants some eyeballs on that club. So it's Mourinho or nothing, right? And it's not like Mourinho will not come, but there's a particular fee attached to it, so he needs money for that. His star striker is our dear Azizat, and she's the one that's going to be the face of this club. So Mourinho and Azizat together are going to form the face of the club, and she's very, very expensive. So these are the things that Wizkid has to consider as well. Now, there are also other things in the background, vehicle, equipment, and you have to buy normal staff bus now, where they're going to put the players and all those things. Utilities too, all those drone cameras. So wait till the water, because it's a green pitch, there's actual grass, it's a natural pitch because that's how Wizkid does. And then there's also media and promotions that he has to do for the club, so that this club can blow. So him and his people have made and this is a hypothetical situation, right? And him and his people have made a calculation and said that what they need is 20 million Nigerian naira. And we're talking about a time where 1 naira is equal to $1. So let's not get it confused. 20 million Nigerian naira, that's what Wizkid needs to raise to be able to get these 5 key things to start his club. So what does Wizkid do? Instead of going to maybe a bank that will get like a 28% or a higher percentage, what Wizkid has said is that, you know what, this club is for the people. I want everybody that loves my music, that loves how I live my life, to be able to invest in the club. So where does he go? Naturally, he will go to the stock market, right? He will go to the capital market. So he will go and raise this 20 million naira from the capital market so that he can buy himself a stadium, get the vehicles and equipment, sort out media promotions, and then get his 2-star key people on board with him so that he can start up this club. So what we are trying to do with this case study is tell you where do stocks come from. And we are thinking of the first steps that an entrepreneur thinks about to say, hey, you know what, I want to list my company on the stock exchange. And because I list my company on the stock exchange, that company is going to be able to have shares that are available for the general public to invest in me, so that I can invest, so that I can enjoy some, public funds and get my company up and running. So the first thing Wizkid is going to do is going to go to an investment bank and say, hey guys, this is my plan, this is my dream. I want to do this football club. I think he has prospects. Maybe let me do the research so that I can be able to feel well. They will do the research, find out the proper price that he should list at, some other due diligence, make sure his corporate governance is in place. He has a board of directors, he has the required staff strength, etc., and so forth. After the investment bank has done all this very, very sweet financial advisory work, and then the main thing will now happen. This is an IPO. An IPO is an initial public offer. So Wizkid FC is coming to the market for the first time. So it's initial. And the market is a public space, right? So that's a public. And then it's an offer. It's offering you, if you want to buy, you buy. If you don't want to buy, no problem, right? So that's an initial public offer. So the investment bank will advise Wizkid, hey, you know what? List 10 million shares or list 20 million shares, right? So that these 20 million shares can go for one naira each. Don't forget now, 1 naira and $1 is the same thing. This is our scenario, right? So it's a huge amount of money as well. So if Wizkid lists 20 million shares at 1 naira each, what that means is that if all the 20 million shares are bought up and all the investors pay 1 naira per share, Wizkid will have 20 million to start his football club, right? So that is the idea, the general idea behind an initial public offer. And then what then happens is that after the IPO, the investment bank sells those shares to some institutionals who then give the 20 million naira cash, right, for all the 20 million shares at 1 naira each. And then Whiskey takes this 20 million, he sends some to Mourinho, sends some to Azizat, sends some to media team, buys some equipment and buses, and he has started his work. Now, these institutional investors will now put the shares again on the market, the public market, the Nigerian exchange, where me, you, and our small businesses can now buy the shares. So now the shares will now list on the market, and then we can now pay at a premium to the first batch of people who bought these shares. So at the end of the day, we may be buying instead of 1 naira, we'll buy 1 naira 50 kobo, right? We'll buy Whiskey's stock. So you see it, there will be a ticker. There's something called a ticker, right? A ticker is something like, you can call it a symbol of a share, right? So if you look at and we'll still see this going forward, you know, if you look at, let me just use a random example, Dangote Cement, right? The ticker for Dangote Cement is DANGCEM, so DANGCEM. So when you're looking for Dangote Cement on the, you know, on the Nigerian Stock Exchange, you want to buy shares, what you see is the ticker, which is that DANGCEM, and then you can click it knowing fully well. So for Wizkid FC, they will give him like Wiz FC, right? So we can give Wizkid a ticker, WIZFC, so that when you see Wiz FC on the stock exchange, you can know that, yeah, this Wizkid FC, I want to buy this for 1 naira 50 kobo and add that to my stock portfolio because I'm such a great fan of Wizkid, and I think that whatever it does, you know, is going to make waves. So this is basically taking us from the idea that Wizkid has all the way to establishing a company, all the way to listing an initial public offer on the market, all the way to us buying the shares that have been listed, you know, on the market, right? So that we can also make the session interactive before we go into questions, which is actually the main aim of this session. We're going to do a very quick poll. We're going to do a quick poll on what are these are scenarios, right? So what are the scenarios, you know, that we envision when some of these things happen, right? So give me a sec here. I think the poll has been shared already. I think the poll has already been shared. So thank you guys so much for that. So guys, we can tick what do we think is going to happen? What do we think is going to happen if these scenarios play out? So what if the first year Mourinho and Aziza they resign after 1 year? What does this tell you? Should you buy more Wizkid shares or should you sell off the one you have? What's your mind saying, right? So I think the poll has been shared. You can actually tick on the poll so that we can get some responses, right? Second question, what happens if they win the Nigerian Premier League? First year, as they enter the Premier League, they tear every year. They won the Premier League. So what does that tell you as an investor? Are you trying to buy more Wizkid shares or are you trying to sell more Wizkid FC shares? Now, the third team now is not even particular to their own club. It's a global team. It's general. So what if government increases the sports budget by 10x, right? So last year when Wizkid FC was not on the market, we were doing 1 billion for sports budget. Now Wizkid FC has entered market. They are now doing 10 billion for sports budget, you know, and all the news outlets have carried this. What does that tell you as an investor? Are you trying to buy more Wizkid FC shares or are you selling, right? And the final question is now imagine that everything is same, but the year and the date is March 2020. And then we all know what happened March 2020. COVID hit, right? And then there was a lockdown. So this is also a global thing. It has nothing to do with the corporate governance of Wizkid's club, right? So if the year is March 2020, what are you doing? Are you trying to buy more Wizkid shares or are you trying to sell, right? So maybe we can just give like an additional 1 minute for people to tick on the polls and then we'll get going. So maybe just a few more seconds and then we can go straight into it. 4 questions. If Mourinho and Azizat resign, what do you do? If if they win the Premier League, what do you do? If President Tinubu decides to increase the sports project by 10x, what do they do? And if it is COVID year, what do we do as well? All right, so I think that's okay. I think we can close the polls now. So is there any way that we can also see the results of the polls? Right. So here's what we wanted to get out of this, right? Sorry? I am not actually, can't see the results. But if the results are shared for everyone else, I think that's fine. Right, so I'm just going to go ahead. So what happens? So look at the question 1. If Mourinho and Azizat resign after 1 year, it could be an indicator that Wizkid is not having it with them, right? Maybe the pressure is too much or something, right? And that could be, in some cases, a negative point that say, hey, this guy, why is he like that, right? And some people will then take that as a bad sign and say, you know what, I couldn't feel well. I don't like Wizkid anymore. He's toxic in his behavior. And this is not to say Wizkid is, but in this particular scenario, which is just an example. So people may be inclined to sell off their shares. And what happens when you sell off shares? The price drops, right? So what people were buying for 1.5, 150 kobo before, they are no longer able to. So because more people are selling. Now, what happens if they win the Nigeria Premier League? This is fantastic news. So Wizkid must be doing something right? So let's buy more, because he's doing his business well, and we are seeing efforts in terms of him winning the Nigerian Premier League. This is such a good investment opportunity. So let's buy more, right? Now, this one does not even concern Wizkid. Wizkid was just there on his own, and then the government decided to increase the budget for sports. If the budget for sports has increased, then what that means is that there is more money, for Wizkid and the likes to be able to execute on some of their dreams, right? So this is a fantastic investment opportunity, and no, it's okay, bring it. It's a fantastic investment opportunity, and then we're in a position to even invest more. So let me see some of the answers that we got here. Right, so for number 1, more people said sell Wizkid stuff, which is what I said also. For those who buy, it's also good because now you're going to buy at a reduced price, but the general market sentiment will be that, hey, this Wizkid guy is such a toxic guy, I must sell his stocks, right? And then look at the answer for number 2, what happens if they win? More people are going to buy because that means he's doing something right, and that's a positive sign for investors, right? Now, you people are brain boxes on this call. Wow. So number 3, people are actually saying that they are going to buy Wizkid. Even though Wizkid was on his own, he didn't do anything. He just sat there, right? More people are saying that they are going to buy more Wizkid stocks because the budget for sports has been increased. And that's a greater opportunity, for Wizkid and his team. Now, look at what was happening in March 2020. It's more of like a 50-50 spread, where people are saying, yeah, some of us will buy, yeah, some of us will sell. Those that are saying that they will buy, you people are not, you people, right? They know something that the rest of us don't know, right? So what those people are trying to do is they are trying to buy low, because obviously the market sentiment during COVID year was that, hey, people that make their money from physical sports, thank you so much, people that make their money from physical sports, you guys cannot play football in the open again. So your business is going to go down. And at that time, people did not know whether the pandemic will be the end of the world, So, but the people that said that they will buy, so that crashed the prices of stocks. But the people that said that they will buy, you people, So if the prices of stocks have crashed, the buyers will then buy very low priced Wizkid stocks. And then once the COVID vaccine comes out, the stocks will appreciate again because we can now, start watching football from the pitches, and then Wizkid can keep doing well. And then the change in the price of when they bought at COVID till now will be such a huge upside, 200, 300% for some companies. So now that we've done quick math, we're just going to go into the final sessions of what a stock is. And the next session is going to be how to invest in stock step by step. So when a market crashes, what happens, right? And I just want to briefly explain this so that we can understand. First of all, there's always a reason for a market to crash. We noticed a semi-crash in the markets in COVID year. Why did it happen? Because people were afraid that COVID was the end of the world, and then more people were selling off their stock, right? Because of fear. So basically, a market crashes because something has happened that has triggered fear in the investing public. Now, let's look at this slide. So when the number of buyers are equal to the number of sellers, what happens? The prices are stable. Because anybody who wants to buy one share of Whiskey FC, there's somebody willing to sell. And anybody that wants to sell a share, there's somebody willing to buy, right? So the prices are stable. Now, what happens when there are more buyers than sellers? The price will go up because now everybody wants to buy, right? And there are just few people selling, and they're going to say, so if all of you want to buy, and what I bought that is 1.5, maybe I should sell it to you people at 2. So they are going to increase their price. And then what happens? The buyers will still buy because that is such a valuable asset right now. Something has happened, that there are more people that are willing to buy than there are people that are willing to sell. Some of the sellers will not even agree to sell, which further raises the price. So the few people that want to sell can sell at such a high premium, and that's where speculative, stock buying goes. We're going to see it later on in the slide. Now, what happens when there are less buyers than sellers? So what is happening now? Everybody wants to sell. And if everybody's selling, that means there's a problem, right? So you have more sellers in the market where I say, please, we don't want the stocks, take the stocks. So the few people that want to buy, two things will happen. Some of them will say, this one I won't sell. I beg, I don't buy again. And I don't see what they wrong. They say, I won't call sell and give me, right? Some people will not buy. Those that are willing to take the risk will buy at a very low rate. So all of you are struggling to sell now. Is that not what's happening? So I will not buy from you at that 1.5. You will give me at 90 kobo. Because if you don't sell to me, I'll go and meet this other person. And so many people are desperate to sell. So what then happens is that when there are more sellers in the market, prices go down. And guys, this is where a market can crash from, where there are so many more sellers and much less people willing to buy. And that just spirals, into the prices of everything, completely going bonkers. That's when they say, a market has crashed. So at this juncture, we can do a little bit of a stretch for like 5 seconds while I try to share a short 3-minute video of why the stock market crashed in 2008. Remember, the key things that need to happen for a stock market to crash is that so many people are willing to sell, so few people are willing to buy. But something must cause that situation. And I want to show us what caused that situation, in 2008. So I'm going to stop sharing this. And then I want to share. Okay. Right. Love it. Love it. Love it. All right. So this is the reason why the stock market crashed in 2008. I just want us to carefully listen. So unlike the first video, I may not play this twice. I just want us to carefully listen on why the stock market crashed. We're going to be able to pick something from it. And then we'll, from this spiral into the next segment of the webinar. So this is titled 2008 Crash, the Mother of Housing Bubbles. When a stock market crashes, they say a bubble has burst, a bubble has busted, depending on if you are British or if you are Nigerian. So when the bubble bursts, now everybody's eye have cleared. So we now know that this thing that people say has value, has burst. It's in there. So now
know the real value of it. It's going to fall down. That's real value. So are we good? I can play the video now. I think I can play the video.
One of the a tool that has also to control the economy.
Bye-bye.
Interest rates. When the economy is rising too fast, the government intervenes and raises interest rates to stop the flow of capital into the market so that the economy doesn't turn into a bubble. Because high interest rates means borrowing money becomes expensive, which means less people will borrow money, which will result as monetary policy. So back in 2000s, when the dot-com bubble burst, the stock market lost almost $5 trillion of market cap. The economy was in recession. So the Fed lowered interest rates from around 3% to 2.5%, then 2% all the way down to as little as over 1% to encourage everyone to borrow money and spend in order to get back the economy on its knees. And it worked. By 2003, the economy began recovering. By 2006, the stock market reached its pre-dot-com crash levels. But low interest rates means low rate of return of government bonds and interest on fixed deposits. It no longer made sense for investors to buy government bonds or keep their pile of cash in the banks, since inflation would slowly eat it away, especially when a few years ago they made unbelievable returns during the dot-com bubble. The S&P 500 rose by over 400% from 1995 to 2000s. So investors were looking for a new opportunity, a safe and rising investment to throw their money at. And real estate seemed like a great idea, but investors don't have the time to deal with individual buyers. So financial institutions came up with a brilliant idea. Since interest rates were so low, everyone was buying a house. So financial institutions would take these mortgages, bundle them together, and sell them to investors in forms of shares. These investments proved to be really great, but banks ran out of financially responsible people to loan mortgages, but investors still wanted to buy these investments. So banks started giving subprime mortgages, or mortgages to people with really low credit scores. People didn't necessarily have enough income to keep making the mortgage payments. Why? Because they would take these mortgages, bundle them together, and sell them to investors. Low interest rates, rising home prices kept attracting more and more investors. The reason why these investments appeared so seductive is because the investors argued that even if they would default on their loan, it's not a big deal. The bank could take back the house and sell it. And since home prices were rising, they would still make a profit. It seemed like the perfect investment. So the banks gave mortgages to everyone. That inflated home prices unbelievable heights. But at some point, one of the borrowers defaulted. So his home was put on sale. And the second one, and the third. Soon, there were so many homes on sale, but not enough buyers. And home prices began to fall. When people saw that their $500,000 mortgage house is suddenly worth only $250,000, it stopped making sense for them to keep making mortgage payments. So they walked away from them. Now, there were even more houses on sale, driving home prices even lower. So the banks were left with a lot of worthless mortgages that no one wanted to buy. So they went bankrupt one after another.
Right, right. And a very humbling, experience in the US. So what can we take from that now, right? What happened, with the housing crisis? The housing crisis was what caused the stock market, in the US and then, of course, around the world, to fail in 2008 because they created mortgage-backed securities. And a mortgage-backed security is basically, a mortgage is basically, you don't have the full money for your house now, so you pay 10%, and then you pay the rest, the remaining 90% over time. So, but that your 90% payments is going to be charged with interest. So that interest is the profits that whoever issued the mortgage is going to make. Now, investors like me and you who want to buy, some very exciting instruments, seeing as how normal treasury bills are doing low at that time, we don't have the time to be going, oh, Mr. Wisdom's mortgage, Mr. Praise's mortgage, Mr. This and Mr. That's mortgage. But if an investment bank put all these mortgages together in a security and issue an investor that instrument and tell the investor that, hey, this instrument is backed by mortgages, then the investor is more willing to invest. So because he can just buy and hold the paper, and then when the mortgages are paid back, they can receive interest. So that's what happened. And people loved the product so much that there were so many buyers and no mortgages left to sell that the banks now started giving subpar mortgages. So mortgages to people that may not be able to pay back. And then this kept increasing the prices of houses. And because, you know, on a mortgage, when you foreclose, you now own the house, which is also income. And since the prices of the houses have been rising because more mortgages have been issued, then it's a fantastic investment, right? And that happened until a lot of people defaulted, and just like the video said, right? So it's a humbling tale of what can happen, you know, when investors are scared, right? So many investors became scared and started pulling out their monies, and that just kept happening together with the crashing house prices and people that had put, you know, millions into their savings. Because so you had like a 10 million stock portfolio,
now it has crashed to 2 million, right?
That can be an issue, right? So it was not a very, very good time. A lot of people lost interest in the stock market because of that time. And I think in recent time, there has been, you know, some, like call it stops that have been put in place, you know, to make sure that that kind of market crash doesn't happen and prices fall so deeply within just one day, right? So are we good to go? Should I mute my second? Right. So we are going straight into, you know, what we are all here for, which is how to actually invest in stocks. And there are three broad ways to invest in stocks. And, you know, going, you know, below, we're going to talk in detail about some of these ways, but I just want to re-highlight that the key behind this thing is for us to get enough questions. More questions we are able to answer, the more knowledge that we're able to dish out, right? So strategies for stock investing. The first one is a diversified dividend compounding strategy. Now, when you buy a stock, right, and this is super important. So if we had like notes or something, this would be the best time to sort of like start taking them down. When you buy a stock, you own a part of a company or a group of companies, right? And these stocks are sold to you on the stock market and through stockbrokers, like we earlier, you know, alluded to. If you keep buying a particular stock, what happens when there are more buyers and sellers? Price of that stock increases. So we keep buying whiskey stock because we love whiskey so much. And then stock that started selling at 1 naira is now 5 naira per stock. So that stock has 5x. It has increased its value by 5 times. Guess who is the final great beneficiary of this thing? It's whiskey. In your stock portfolio, your 1 million has turned to 5 million because the stock has 5x, right? But the market capitalization of whiskey stock has moved from that 20 million to 5x, which is 100 million. So whiskey can walk into a bank and say, hey, I'm a company valued at 100 million and I want 50 million in debt, 75 million in debt. Sometimes you go, yes, say Elon Musk don't pass Zuckerberg for billionaires list. Small time, another person will pass. Small time, somebody will come down. Zuckerberg loses $1 billion in a day. It's not from his bank account. It's from the valuation, the daily valuation of the stock, right? Which is determined by what people are willing to pay for shares in his stock, right? So the final beneficial owner of your willingness to buy a stock is the issuer of the stock, is whiskey. But you are in the flow of money, so your money will double, triple, quadruple, etc.
when Whiskey will now say, if I've run my business at the club, I've sold jerseys and I've made this amount of money, let me cut small part of the profit I made and share it back to you people, so people can know that yes, we invested
in the stock. That process of cutting
small of his profits and sharing back to
holders of the stock is called paying out dividends, right? So a dividend is like Whiskey that's done business. First of all, you bought the shares, so you have the shares in your portfolio. And based on market sentiment, the shares will increase in value or reduce. But in addition to that, when Whiskey does business in the real world, sells his jerseys, sells out stadium tickets, the profits from what he has gotten, he's going to cut some part of that and share it back to everybody who has stocks. So if you have 2 shares in Whiskey's company, you will get 2 shares worth of dividend based on the profit that he has made, he has sectioned, and he has shared back to us, right? Now, what that means is you can even buy the stock and not care about whether Mr. President Tinubu has increased sports budget or whether it's COVID or whatever. You can just be in your parlor. Every year, you are receiving dividends from Whiskey's activities in his club. Don't forget, you own a share, you own a part of that company to the extent of the share that you bought, right? So you own a part of that company. So you are able to enjoy in the profits of that company, which comes to you as dividends. So that's what a dividend is. Somebody has done business who has listed, you bought his stock, you showed very good support to him. Now he has made some profits, he will show some support to you as well. And you've received that dividend, it's sweet you for Bele. You would like to keep holding that stock, because if you sell the stock, you don't get the dividend anymore, right? Quite interestingly, my mom, I hope she's not on the call, if you are, sorry, mommy. The truth of the matter is that my mom, every year, she has an urge to change phone. There are some stocks that she invested in, and once the dividend hits, those are, but any day she decides to sell those stocks, she can't be changing phone every year again. I think she should, this year, let her finally go up so that she will not need to be changing all this. It's okay, I'm just a hater, that's fine. So the most important thing is dividends are things that you get over time, as long as you're holding the stock. It's a thank you sort of, that the company gives to you. Now, dividend, when you diversify your dividend and you want to compound, this is a long-term strategy. The number one strategy is a long-term strategy, right? The diversify idea is, we had earlier said that there are different sectors in the market. There's consumer goods, there's technology, there's banks, there's, manufacturing, there's fast-moving consumer goods. For this particular style, what investors do is they pick a certain amount of stocks across each of these sectors. You go pick 2 from bank, pick 2 from consumer goods, pick 2 from FMCG, pick 2 from tech. Just like that, a limited amount of number across each of these sectors, depending on the sectors that you're interested in, right? The only thing that I would add to that is the stocks that you are picking, as much as possible, try to make sure that they have a dividend yield of at least 5% or above. Dividend yield simply is the percentage of the dividend, the dividend they gave you, what percentage that translates to in respect to your holdings. So now you have 100 units of a stock, or you have 100 naira in a stock, in, let's say, normal Whiskey, the FC stock, you have 100 naira of it, right? And Whiskey gives 20 naira in dividend. So what does that mean? That's 20%, right? So Whiskey's dividend yield is 20% because it has given you 20 naira for each 100 naira that you hold, right? So that's what it is. So try to pick a dividend. First of all, try to pick stocks that pay dividend, right? And then try to pick dividends, that are much on the higher, so like 5% going upwards, right? And that would be, I would say, a decent place to be at. We're also going to put in, so in the after webinar things that we're going to send, we're going to put links to the Nigerian Exchange website, where you can see there's something called corporate announcements, where you can see dividend yields, companies' announcements. All those things are there for us to, look at as orthodox investors. And when you're doing this strategy, you are thinking 10 years and beyond. This is not Ponzi scheme. This is not buy one to get 2 in 10 minutes. This is a strategy that people use over a long period of time. Some people in the US, they retire on their stocks and their dividends, right? Our markets were still growing, and we need to also think long-term about things like this. price of a stock now in another 10 years, it would have cancelled all the fluctuations that would have happened in between, and you can enjoy the dividends that even come to you as well. So diversified dividend compounding strategy, first thing, go across the sectors. Second thing, make sure you pick something that has a dividend on it. Third thing, make sure you have a long-term mindset. The last thing is when you get the dividends, unlike me and my mom, you want to reinvest that dividend back into the stock. So Wizkid have paid you 29 dividends, you buy 29 stocks of Wizkid FC, right? You're doing Dangote Cement, it pays you 29 on your 100, you put that 29 back into Dangote, no matter the price, don't worry about the price. This is called compounding, and it will continue to increase the number of shares you have, increase the value. Imagine you're doing this over 10 years. Dividend where you will receive of 20,000 before, you are now receiving 2 million dividends for doing nothing, apart from just reinvesting dividend back. So that's a diversified dividend compounding strategy, DDCS. Very, very sweet. The second way to do this is Naira cost averaging, right? And for retail investors, the 5,000 Naira investors, this is best for you. Every month or every week, you already have a list of stocks that you can choose any which way you want, right? Always better to diversify your portfolio across sectors, but some people have more interest. So, for example, now on the Nasdaq and on the American scene, American stock scene, the first three stocks that you're going to hear is Tesla, Alphabet, which is Google, and iPhone, Apple, right? So those are people's best stock to buy. The more you're buying those stocks, the more the prices are going up, the more you are gaining, the more they are gaining in market cap. It's just a very, very romantic cycle, right? So, but here, there are key blue chip stocks. You know, look at the premium board like we explained earlier in the webinar. Look at also the main board like we explained earlier in the webinar. Pick some stocks across some several sectors, right? Especially the ones that have dividends. Those are the ones that I personally go for. And then even if it is your 5,000, I started investing in the stock market in 2020. And what I noticed is with just 5,000 every week I was sending in 5,000. So I had a list of 10 stocks. I had 5 banking stocks there. And then I had 4 FMCGs and 1 insurance stock, right? So what I do is this week I'll use 5,000 and invest in the first one. The next week I'll invest 5,000 in the second one. Like that. COVID was crashing. I was investing. No problem. So that's what we call Naira cost averaging, or So what would then happen is that you've invested 5,000 over stocks in an extended period, like what we said here, 10 years time. And what you find out is that all the market fluctuations that everybody's talking about and losing so much money, you average it because you are doing a systematic method of investing. It doesn't have to be 5K, it can be 10K, it can be 40K, it can be 100K across several stocks. But what you find in the long term, 10 years and beyond, is that you've built such a strong, balanced portfolio that the fluctuations did not really, because when it was high, you bought. When it was low, you bought. So your portfolio will average out, and then don't forget you'll be receiving very, very good dividends depending on the stocks you pick as well. Speculative investing is the one that I don't really advise because, people want to get more reward and no risk. But speculating, you're going to take a lot of risk. And your ears are going to be on the ground. So in the case of Wizkid FC now, once they announce increase in spot budget, you are quickly buying so that when you buy, before everybody else has bought, your price has gone up. It's not that you will not leave it to. When your price has gone up, please sell. Because if you don't sell, you cannot remove the profit from your investment. And if the stock comes down again, you are back to square one. The only thing is that you have lost time, right? Speculative investment is advised for people who have actual, people that have engaged in market activities. They are very, very, vast in this space and they read a lot. If you are like half of me, they like to read, I don't think speculative is very good for you because you will go in there thinking that you are going to double your money, and you can't double your money in a short time, in 3 months, in 6 months. There are several examples of this happening, but it is better to actually be a long-term investor when it comes to the stock market. And there are also good speculative stocks that you can play in. So for example, my favorite speculative kind of stock is penny stock. Penny stocks, in my opinion, are stocks that are below 5 9, right? When the stock market is rising, let's say everybody in the stock market is adding 1 naira, and you bought a stock of 1 naira. If 1 naira adds to your 1 naira, that's 2x. So your 1 million has turned to 2 million. But if Wizkid's stock is 100 naira, and his own 100 adds the same 1 naira that all the stocks are adding, Wizkid has only made 1% increase. While me, for the same 1 naira addition, I've made 100%. You know, so if you're going to do speculative investing, look for the penny stocks. The list is there on the NGX, but I must warn you that investing in a stock without actually knowing, you know, the fundamentals and running some kind of analysis, looking at their corporate announcements, I think it can lead to very, very serious tears. So let's always try to engage a financial advisor. Okay, there's a Q&A. Right. So let's take a quick, another Q&A. Are you sure? Right, so to invest in stocks, here's what to do. This is a step-by-step guide, right? You want to invest in stocks as a first-time investor. You join this webinar with the hope that you are going to be able to take away from this discussion and how to invest in stocks. This is the time that we need to pay attention to that. So if you have your book and your pen, it is the best time to get that out, and then let's write together. So the first thing you need to do as a first-time investor is you need to approach a stockbroker. We are also going to send you the list of SEC registered. You can't even be a stockbroker if you're not registered with SEC. So we're going to send you the list of, so SEC is the Securities and Exchange Commission. If you can remember the example about markets, SEC is the regulator, right, of the stock market. Just like how CBN is the regulator of the commercial bank market. Now, you need to be able to go to a stockbroker that is registered. And there's a list of all of them. And even on the SEC website, you can see, oh, these are the first 10 stockbrokers based on value. These are the first 10 stockbrokers based on number of trades, etc. You can even call some of the brokers, have a discussion with them, test out their trading platforms, see which one best suits you. But what a stockbroker essentially does is the person that helps you purchase. So the person is the seller in the market, right? So Wizkid is the producer of the product. The stockbroker is the seller of Wizkid's products, and then you are the buyer in this case, like the example that we made earlier on. So first, you need to get a stockbroker as a first-time investor. Now you've gotten a stockbroker. The stockbroker is you are going to open an account with this stockbroker, right? And one of the processes for opening the account is they are going to give you a CSCS form, right? Now, this CSCS is short for Central Securities Clearance System. And you can think of it as a box. It's a depository, but you can think of it as a box where all the stocks on the stock market are domiciled and then apportioned to each investor, right? So if you have a CSCS account, that your account is going to have some stocks inside with the depository called CSCS. And then it becomes easier for stockbrokers to be able to track, what is yours and what is not. So they'll give you a form. You'll see the form on the next couple of slides, and we'll just run through how to fill that form. And then after you fill the CSCS form and they've given you a CSCS number that's a unique identifier in this depository, you are then able to start trading stocks through the stockbroker, right? So that's for registration. The next process is stock selection. So you need to determine what kind of investor are you. Are you a dividend investor like me? I just go ahead and buy dividend stocks and stocks that return very well on dividends. So the banking stocks, I like them because they return very well on dividends. There are some FMCGs that I also like very well because they return good dividends. So you go ahead, you select, you need to know what kind of investor are you. Are you a speculative investor? You take risks, right? Then your own stock selection is going to be different. And then we have, after webinar materials that are going to send that sort of classify these stocks as well. Now, after you've identified the industries and you've made your stock selections, you now want to find out how are you going to make the investments. So do you have a bulk sum of 10 million that you're trying to spread across different stocks? That's a one-time investment. Or are you like me that's still in the process and you have your small 50, 100, 1M here that you sometimes put into your investments in a very, very, cost average like way. So you have a bulk sum now, you've done a transaction, you have 1 million. You go to your stock list, I have 10 stocks. It's okay, 100K for this stock, 100K for that stock. And then you just buy all of them like that over time. And then you have a 10-year average that gives you something very good, right? So after your stock selection and you've understood how you're going to be making your payments, you make the payments. Some stock brokers will allow you to put your name in the narration, transfer to their account, and then they will now subscribe to your stockbroking account and you can buy stocks from there. Others is super automated. You go on their trading account, you put your ATM or something, and then that immediately gets you into that immediately increases your balance on your trading account. And your trader view, you can see all the stocks on the market, and then you go there and then you buy one or two stocks for yourself. So it depends on which particular broker you use, which is why it's important to. So we have the list of those, the brokers and the markets can go through, and then that's an after revenue activity. Some good stockbrokers will also send you monthly reports or weekly reports on how your stock is doing. And this helps you to know the performance. It's not for you to panic that what you bought 10 naira is now 9 naira, because you must always have a long-term mindset. But these reports also help you to know which stocks are performing well, what is the industry that is doing well. And they sort of break it down for you. You can see your money that came in, how much of that went to fees, how much of that is left, how much are you going to get at the end if you sold the stock right now. It's also something that we do at our collaborative investment club, which is where we show, what are the actual things that we invested in, the monies that we're putting, and how do those monies, if we were to, liquidate those stocks now, what are those monies going to fetch for us? So investment banks stockbrokers that send reports monthly, weekly basis, you absolutely have to key into those. I think it's basically most of them, And then, of course, we spoke about dividend reinvesting, so it's very, very important. First-time investor, get your dividends. What I do, I'm so manual. I have my notes on my iPhone. I will write the amount down all the way to my FGN savings bonds, this thing. Once I receive the coupon or I receive a dividend, I will write it down, 20,702 naira dash UBA. After a week or two, or after the dividend declaration, this thing is done, I will go and be putting those things back inside. 20,702 naira, I will buy UBA with it, like that. So if you don't want to be manual like me, that's fabulous. Just have a system where the actual dividends that you're paid, you invest it back into the stock that you bought it from. If you are not a first-time investor, maybe your dad bought shares for you, or you are advanced in this thing, there are a couple of steps that you have to go through. First step is, this is the boring part, but the good news is, I think these slides are also going to be shared in the post-webinar activities. You can go back and digest and, come up with the strategy that I want to use going forward. Now, if you've already bought stocks, you need to physically go to the CSCS office. I think they're in Abuja, they're in Port Harcourt, they're in Lagos. Go there, tender your details, your driver's license, things that identify that you are who you say you are. And then you pay a global search fee. They will search for all the stocks that are in your name, right? Once you've gathered those stocks, you can then know that, okay, these are the stocks that are in my name. Alternatively, you might have been during the era of physical stock certificates. Physical stock certificates. So you may have those physical stock certificates, but I would always advise, go to CSCS and do a global search so that you can have all the stocks that are in your name in one place. If you've misplaced the certificates or they are damaged, that's fine. Get your CSCS statement from the CSCS office, right? Now, on that CSCS statement, depending on how the stocks were bought and depending on the stockbrokers that were used, you may see that some stocks are listed for some stockbrokers, right? And you may see that some stocks are just listed, right? Which means there's no stockbroker. Sometimes the stockbroker that the stock is listed under is now what we call a dead house. So the stockbroker is no longer functioning, right? What you then want to do is you want to transfer those stocks from that, not listed stockbroker anymore, or the stocks that do not have any stockbroker under them. You want to transfer these stocks to your own broker of choice, right? And there are two broad ways to do that. You do an intermember transfer or you do a dematerialization process. Don't worry. We'll show the forms, I think, after this slide or so that you can see what it is that we are talking about. So a demat form, depending on the broker, they may have, I know that some brokers have their special demat forms, but there's also a general demat form as well. That form is a form that you fill in to show, okay, these are the stocks, this is the company that you invested in. And the information you're filling in is based on the CSCS global search that you've done or the physical certificates that you have, preferably the former. Once you're done with this DMAT form, you submit to the stockbroking organization, and then they will do something called dematerialization of your shares. Now, the dematerialization process basically is your shares were formerly in the old world physical certificates. Now we are going to dematerialize it so that it can become more modern. It's now digital, and then it's going to be stored in this depository called CSCS, right? And that depository is what is now going to hold your stocks with the stockbroker. Okay. So after your DMAT process, your stock is now on your phone, quote and unquote, right? And then you can sell or you can buy additional. So that process of dematerialization, if you're not a first-time investor, super important. If you're a first-time investor, just carry on. It does not affect, right? As somebody that has also invested in the stock market before, you also should claim your unclaimed dividends. We also linked the SEC mandated non-mandated website in some of the post-webinar activities that we're going to send. So you can click on that website, search for your name. All your unclaimed dividends are going to come out, right? So you can search those. Once your unclaimed dividends are out, each company that has listed on the stock exchange, and this is very, very important, so let's try to pay a little bit of attention to it. Every company that has listed their stocks on the stock exchange has a registrar. Now, a registrar is the person that keeps the information of the stocks that have listed to say, Louis bought 10 stocks, Wisdom bought 20. That registrar registers the stocks that have been bought for that company, right? So I'll give you an example. If you buy UBA shares, the registrar for UBA is Africa Prudential Registrars, right? And Africa Prudential Registrars will keep the register of stocks for all the UBA stocks that have been bought. If you say you want to buy Transcorp stocks, also the register for Transcorp stocks is Africa Prudential. So a registrar can have more than one company, in their register, I think, right? And these companies, for a company to list, you must have a registrar. Also, what we've done for you, we've gathered all the lists of registrars in Nigeria and the companies that they represent, right? So if you want to buy, if you had some stocks in the past, you can go to that list and check which registrar is responsible for your stocks, right? And then once you identify the registrar, you will then go and download from the net their unclaimed dividend and form, which we're also going to see downstairs as we progress. And you fill that form and then you submit it at your bank so that they can mandate it and you receive your dividends, right? I said it is very simple, but the process can take like up to a month. DMAT processes, I've seen DMAT processes that span, more than 2 months. And there are also, times where it's like 2 weeks, 3 weeks. So try to, normalize your expectation, on the process. Of course, reinvest dividend. And then once you've dematerialized and you've received your dividend, you can also follow the steps of a first-time investor, which is cost average over time, and select more stocks if you need to, and sell redundant stocks, and then buy better performing stocks. So these are the highly coveted forms. On the left, we have Africa Prudential Registrars. They are also registered on the Nigerian Stock Exchange. And then this is their e-dividend mandate activation, right, form. So, earlier we spoke about unclaimed dividends, okay? So this is the form that you're going to fill for you to be able to get those dividends paid directly to you. And this is super important, right? So once you've affixed your passport on the top left, what you then want to do is to the right-hand side, tick the particular, stocks that you bought before, or that you have the certificates of, or that you went to CSCS and they did a global search and they said, hey, these are the stocks that you have. You want to tick that on the right, fill in your information on the left. I think it's super straightforward. If you do not yet have a stockbroker, you can ignore the CHN part. That's clearinghouse number. You can ignore that. And then you want to sign at the bottom. If you're a corporate, it's the same thing. Your two signatories sign, and then you guys have the company seal to the right there. Now, super important, the bank that you fill on this form is the bank that your dividends are going to be paid to. I'm just going to say that again. The bank that you fill on this form is the bank that your dividends are going to be paid to. Super important for us to know that. Now, the second form in the middle, the middleman, is the full dematerialization form. And this is just the general demat form so that companies use. Some registrars have a specialized demat form, and your stockbroker is able to tell you more about that. Now, for this demat form, the first thing you're filling is the registrar. Remember, we said each company listed has a registrar, right? So if you're buying Wizkid FC stocks, maybe Wizkid would have gone to meet a registrar to get him in the process of listing stock. So if you have stocks from old times, using the material that we're going to send you after this webinar, showing all the stocks and their registrars, you want to identify what registrar is responsible for which of the stocks that you're trying to dematerialize. Then fill the name of that registrar. Where it says name of company, that's the name of the stock. So if it's a First Bank stock, if it's any stock that you bought, that's where you want to fill it in, and the name of the company there. Then affix your passport as usual. Everything is pretty straightforward. Your stockbroker is able to guide you on things around the CSCS investment number and the clearinghouse number as well. Then you also are going to need to sign the indemnity, especially if you've misplaced your certificates before now. And then you also sign below. Again, the bank account number that you put here, it forms the basis for where your CSCS account is going to operate out of. So you need to understand that as well while you're filling the form. And then the last form on the right side is for the first-time investors who are now just getting into. So this, you would see a form of this format, or maybe slightly different, but it's the same thing. This is an investors bank. It's for direct settlement as regards the CSCS, PLC function. So what you want to do with this is your stockbroker is going to give it to you, and you're going to have to fill it. If you're a first-time investor, the CSCS account number and clearinghouse number are not things that you're going to have. So you can leave that blank, and then when your account is up and running, and that can be done. And then the most important part of this form, is whether you opt for direct settlement or not, which is what I want to explain. Direct settlement means when you make a liquidation of stocks or you sell off your stocks, it will be directly settled to your bank. And there are banks called settlement banks. So when you're filling this form, you want to make sure that it's a settlement bank that is put as your bank account number. And I know that the Fugas banks are settlement banks. I know Sterling is a settlement bank. I know Stanbic is a settlement bank. So Fugas is First Bank, UBA, GT, Access, and right. So I know that these 7 guys are settlement banks. So if you have accounts with them, you want to put those guys in this form so that you will not have settlement issues. I've never had settlement issues, so I don't know what that looks like. I may not be able to help you if you do, right? So once you fill that in along with the other information, you're good to go. You submit this form, and then those are the key things that you may need to know as either a first-time investor or as somebody that is returning to the market, to make an investment. So this is the final stage before we finally get into the questions. I think we have okay, good. So we have some good 30 minutes for questions. And this is just a poll that I think the guys will run. If you have 10 million, which stock are you buying? Right? So imagine that the year is 2014, that's 10 years ago. There's Dangote Cement, there's First Bank, there's Seplat Energy. This is across different sectors. So Dangote is manufacturing, First Bank is in banking, and Seplat is in energy. So which of these stocks are you buying? I think we can get the poll live. Right. So I think that the poll is going to be shared. Which of these stocks are you buying? The year is 2014. You have 10 million naira and you want to invest in one of these stocks. So which of them are you buying? Are you going for manufacturing? Are you going for banking? Or are you going for energy? Right. 2 more slides to go. So let's once the poll is up and running, then we can start voting. You can just do like 2 minutes to vote, right? Because the value is under, right? So which of these stocks are you buying? Are you buying Dangote? Are you buying First Bank? Are you buying Seplat? All right. Okay. So I think we're good to go now, right? It's been such an interesting time. Okay, I think the poll is up. So if you have 10 million, which stock are you buying? Dangote, First Bank, Seplat Energy. Let's just do some 60 seconds to get people voting. Pick the stock that there's no wrong answer. Just look at the logo. Anyone that's fine, pick it. I'm joking. Even though there's no wrong answer, but that's not how you should pick stock. You should have at least something that says, this is why I picked it. Oh, because I love energy. So I'm going to pick Seplat. Because I'm a banker. So I'm going to pick First Bank, So, so let's pick. Once 60 seconds is up, let's see some of the results. And then let's be highly motivated. We're slowly coming to the end of the session. I can already see that there are some questions, and I'm motivated to answer those questions for us to be able to live with additional value at the end of this very romantic session. So, are we getting somewhere? Right, our 60 seconds is coming to an end. If you've not voted, that's okay. Right. Love it, love it, love it, love it, love it, absolutely love it. Right, so we had much more than half of the class votes. Thank you guys so much for sending in your votes. So a lot of people are going to go for Dangote, which is very romantic. And that's a brand that I'm sure everybody knows all the brands here, I'm sure, but they feel that that's a stronger brand. So if they were in 2014, they are definitely going to invest in Dangote. So we had 51% of people that voted going for Dangote. Next on the list is Seplat, right? So a lot of people, most likely, they are more tuned to energy, especially now that there's no light, but there's heat. So definitely they would have invested in Seplat in 2014. And then we have First Bank. Then we had 11% of the guys go for that. And so that's how it's split. So 51% for Dangote, 37% for Seplat, and 11% for First Bank. Very, 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 very romantic stuff. So thank you so much. Let's quickly go to the next slide, which shows, the decisions that we've made. So if you said you're going to invest in DANXEM, and by the way, don't forget I said how these stocks are represented on the stock market is based on the ticker. So DANXEM is the ticker for Dangote Cement, right? And you put in 10 million. So the price in 2014 was 235. And the price today, fabulous, fabulous. The price today is, 686. So what has happened is that your capital has increased to 29 million. But don't forget that, so this is just a very, very, is such a summary, it's a super summarized, average of what has actually happened. So 5% dividend over that time, you would be gearing closer to 39 or 40 million for Dangote. If you picked FBN, very good one also, with 3x your investment in 10 years. And if you pick Seplat, I think that was the best option. And you've done over 7x of what your investment is. But the reason for this is to show you how, these things can appreciate over time, right? If you have money in a savings account or under your pillow, your 10 million 14 years ago is still 10 million today, except it is actually worth less than 10 million in 2014. So 10 years is such an ideal time to, invest. Several things have happened in the market from 2014 to today, but you would see that on an average, no matter what, industry or what sector you pick your stock from, you are more likely to see some good capital appreciation, especially if you are reinvesting your dividends, right? So thank you so much for sticking with us, irrespective of all the several village people inclined glitches that we had. We're so happy that we're able to get to this particular point. And I mean, the good part is the questions, right? So I'm just going to go straight to the questions. But before that, we have a 10K giveaway, do we? For somebody to start investing in stocks, we have a 10K giveaway for the fastest fingers, right? And the question is very simple, right? So Please, 10K giveaway, fastest fingers. Yes, the question is a very simple question. I'm going to say the question twice. The first person to comment on the chat, the correct answer, is the person that is going to win this giveaway. Okay, the chat is not open, right? So on the Q&A section, right? So, okay, that's fine. Innovation at work. So the first person to, comment on the Q&A section, this question that I want to read out now is the first person to get the right answer, okay, on the Q&A section is the person that's going to win. So if we're ready, I think we're ready for the question. I'm motivated. So let's go. The question is, in what year did the world witness the first stock market crash? In what year did the world witness the first stock market crash? Right? So first person to get the correct answer, 10K to go on your investment journey. Very, very romantic, from Beach Africa, also known as Beige Africa, and in some circles known as Bege Africa. So let's be motivated. What year did the world witness the first stock market crash? So while the answers are going in, I think we then want to now take the Q&A, and then we'll announce the winner at the end of the session, right? Announce the winner at the end of the session. Fantastic and fantabulous. So let's go. So I'm going to start. Fabulous. So let's start. While your answers for when the first stock market crash in the history of the world was noticed, let us also go to start answering some of the questions, which is why a lot of us are here. So Chief Ken says he wanted to ask if one become an investor by investing, or become investors in our mind first. To help my question, is the cash flow quadrant right? Investors are the 1% of the world. How do the others invest? Or how do the others turn investors? This is such a brilliant question. Thank you so much, Chief Ken. The truth of the matter is that an investor is both in mind and in reality. So for instance, if in my mind I say I'm a 10 million investor, but I don't have on the ground investment to show, then I'm dreaming. I'm just a dreamer, right? And if you look at the cash flow quadrant, what Kiyosaki has actually said is that it's just one quadrant of the, that is investors. That's true. But as a matter of fact, our next, and we are talking about 5K here, right? So becoming an investor does not, you don't have to be in that particular quadrant of what Kiyosaki was saying. You don't have to be there. To become an investor, identify securities that you're going to invest in and put your money that you've earned there. So create an income. When your income has come in, bonds, don't worry about it, right? You don't have to be in that quadrant. Anybody can get there. It's just based on the scale, okay? So it's just based on what is the scale, of you getting there. Right. Okay. So since that question is, I think the question automatically vanished, right? So the next question here is, so Main Vision says, where can we buy these stocks? Right, so all these stocks are listed on the Nigerian Stock Exchange, but where you can actually buy them, if I'm to follow how you're asking your question, is you actually have to use a stockbroker. And like I said, we're going to share the list of stockbrokers after this webinar to your emails. So once you open an account with a stockbroker, what has then happened is that you can then buy some of these stocks using the account that was opened for you by your stockbroker, right? So I think that answers that. Isn't it? As it says, how do you know shares or stocks that give dividends? This is such a brilliant question. Thank you so much, Ezine, for that question. I did say that we were also going to send, there's a particular page on the NGX that shows, corporate actions, etc. stocks that pay dividends, they are listed, they are there, right? So in fact, if you wanted to even try it now, just even straight from Google, you don't have to wait for our after webinar, materials. Direct from Google, you can just search the name of any stock and just put dividend behind it or last dividend paid. And then you're able to find out, does this stock pay dividend or not? I could give you a tip. A lot of the banking stocks pay dividends. A lot of the FMCGs pay dividends, right? Some insurance stocks pay dividends as well. Some do not. Some tech stocks do not pay dividends. So, but it's not a sector specific thing, right? It's information that is available, and you can go ahead and see a list of stocks that pay dividends over time. There's a very interesting website that I like to also visit. I'm going to type it especially for you, investing.com. Right? So if you go to investing.com, you're able to see some of this information across several markets, not just even Nigeria. But we are going to have this information well packaged for you and sent to your email after this webinar. So thank you so much, Ezine, for that very brilliant question. Next question you also ask is, do you speak to a stockbroker and tell them which type of investment you want to do? Right, so a stockbroker basically helps you buy stocks from the Nigerian Stock Exchange. So yes, you do speak to them, and they also have advisory. So some people send weekly updates, or when there's an information, some stockbrokers send weekly updates when there's an information online, something has happened that may affect market sentiments. They send that to you via email. Some do not, but a stockbroker also advises you basically on which particular stocks to buy. So if you already know what stocks you're coming to buy, you've done the research like we spoke earlier on, you know the kind of investor you are, you've gone to the NGX, you've seen that these are the stocks that pay dividends. After opening your account with the stockbroker, you then can either go to their trading platform. Some have e-trading platforms. You can go to the trading platform since you're already registered and buy the stocks by yourself, or you can go the manual way of giving an instruction, right? So you give an email instruction and say, hey, buy 10,000 naira worth of First Bank, buy 20,000 naira worth of Seplat, buy 10,000 naira worth of Chance. You give that instruction, send it to them by email after doing an email indemnity, and then they execute that for you. And then you can see the stocks that you bought on your CSCS statement when you print it. So thank you so very much for that. Those brilliant questions. So Emmanuel says, is the CSCS number different for different stockbrokers? Brilliant, bright question. You people on this webinar, you people are smart, right? So a CSCS number, yes, it is different. Some people can have up to 2, 3 CSCS numbers, but what is actually advised is have just one so that all your stocks are in one place. Any stockbroker that you open with will have their CSCS number that they're going to actually advise you on. So right, Anonymous says, would you give us rights? So we already will. AfriVest definitely is a stockbroker. So we definitely will send you the list of the registered stockbrokers. We are going to do that at the end of the webinar so that you can also see. So all right, so we're definitely going to do that at the end of the webinar. So can one register with more than one stockbroker at a time? Yes, absolutely you can. You definitely can register with more than one stockbroker at a time. But I mean, you should, just have one so that all your things are in one place, except you're talking about yourself and your business. Then you have one stockbroker, your business has another one. So Oluwole says, we would appreciate if you can have access to the recording of this session thereafter for playback. Right? So that's what Oluwole says. So I'll confirm with the team. Let's get that also sent in the post-webinar activities. Somebody says, so how do I get a CSCS account? So straightforward, we get to a stockbroker. We'll send you the list of stockbrokers on the Securities and Exchange Commission. Get a stockbroker, and the stockbroker will then open an account for you, an in-house trading account, as well as a CSCS account. We looked at the form, in previous slides. Fill that CSCS account, you're going to get a CHN number, and then you're going to get a clearinghouse number and a CSCS account number, and then you are good to go. So next question, can global stock search be done online? I haven't personally done it online. For the clients that I've handled in the past while I was working in an investment bank, we always advise them to go to CSCS. I'm sure that there may be a way to do it online, Mr. Emmanuel, but what I think, and this is just my personal opinion, it's easier to just go to the CSCS, office or call their numbers and then, have a conversation with them, pay the global search fee, and you're good to go. Your stockbroker can actually also advise you, on this. So I've seen a couple of transactions where people, do this through the stockbroker, but the former is my preferred option. So thank you so much, Emmanuel, for that question. Dabuki says, why can't we buy all three? I think so. We absolutely can buy all three, and it can even be 30 million. It was just a case scenario, and we can definitely buy all three. And we would have then gotten, those results that we saw. Some people did 3x, some people did 10x. So absolutely, we definitely can do that. Somebody says, how can you claim your mom's shares? If your mom is still alive, then she is the one to claim the shares. But if your mom has passed, first of all, condolences for that. Next, she has to have an estate account. It is the estate account of your mom that claims the shares, right? So the estate account will then be, so the beneficiaries of the estate account are the people that are going to benefit from, your mom's shares. I said it now, it's below 30 seconds, but actually creating an estate account and going through is a process. I can assure you of that. How to start the process is create an estate account with the bank, after you've done letter of administration, all those things. Then you now take that to a stockbroker who can then start, the process. Yeah, but you will have to exercise patience on the process because it can be really tedious. So Ikiruka says, right, at what percentage do I sell my stocks and to keep buying more for increased unit of that stock for future gains? Smart question, Ikiruka. So what you're saying now is, at what percentage return, I guess, should you have made before you sell your stocks and then start buying increased units of that same stock? So I'm just going to assume that you're a speculative investor. So you buy low, sell high. It's still good. You need a lot of research to do this, and it differs for each stock, right? What I find to be helpful is, in my mind, I have a particular percentage. Once it reaches that percentage, whether it has a chance of going higher or not, I will sell it. The same thing I also have for a lower percentage. So it's called stop loss and take profit. On the stop loss end, I bought a stock for 10 naira. I will tell myself, if this stock gets to 8 naira, I am going to sell it and cut my losses and rest for my peace of mind. On the other side, I will say, if this stock appreciates from 10 naira to 12 naira, even if the stock will finally go to 20 naira, I don't care. Is that 2 naira I want to make? I will sell it off and restart. So that's a better way to look at it. There's no particular percentage as to when you can sell your stock. And as a speculative investor, you must always be listening to market news, and there are several things that you need to do as well. So Everest says, I bought MTN shares during the MTN. Yeah, the MTN thing, you mean the public offer, right? I registered and I got a CSCS number, and now I have forgotten my credentials and have been trying to access the account. I just gave up. Can I go to CSCS, do global search? Everest, yes, don't give up. So you can go back to your broker. You mentioned the name of the broker here. You can go back to the broker and tell them to print you your CSCS statement, and you can have that. It's super easy. You don't have to go all the way to the global search, right? So just go back to your broker, let them print your CSCS statement for you, and then you're able, to get that sorted. You're able to get that sorted, right? So please go back to your broker, let them print your CSCS statement for you. Now, Ebuka says, based on your experience, which stocks would you recommend? This is a very good question, and it's also a damning question as well, because people can take a recommendation from me as financial advice, and then I will now be in trouble, and then it will not be so funny again since I put my heart to the back. So unfortunately, I'm unable to recommend what particular stocks you are going to buy, but I can tell you what stocks I have in my portfolio and what industry they are from. I will tell you the industries actually. So my portfolio has at every point a minimum of 20 stocks, right? Now, what I do, because of dividend, I'm a dividend investor, I go for stocks that pay good dividends. And a lot of these stocks are in the financial services sector. So I have 1 financial services stock, I have 2 insurance stocks, and then I have 8 banking stocks, right? So that's 10. The other 10 are scattered between FMCG. So you're going to see some fast-moving consumer goods stocks. I have only 1 tech stock, and then I have a couple of energy stocks. One particular energy stock that I bought, which I listed as an example here, I like it because they pay dividends 4 times a year. It's a quarterly dividend paying stock. So I like that stock. That's why I have it. So Ebuka, I'm unable to give you the specifics, but this is what you can get. We do, however, have a collaborative investment club that invests, for people that are interested only for that club, and it's even closed at the moment. Those guys get to see what stocks that they're actually putting in to the markets, right? So I think that's the final question. What we then have here is just the answers that a lot of people have listed. And I think that there are more questions down. So I'm just going to scroll all the way down till I get to the question. Right. So Ajayi has a question. He said, can you list the 3 best stockbrokers in the Nigerian market? So the problem with this is that the best stockbroker is super relative. I may like a stockbroker because I have a person on the inside and they make my transactions fast. Someone else may like a stockbroker because they are doing large volumes as published by the SEC. Somebody may like a stockbroker because they have very good technology. So this is super relative. But Ajayi, I'm going to help you. Go on the Securities and Exchange website, which is even part of what we're going to send, or you can even just Google straight, best stockbroker by volume, best stockbroker by value, top 10 stockbrokers by number of trades, executed. You're going to be able to see some names. If you have these 3 lists, just do a cross section. You appeared here, you appeared here, you appeared here. Therefore, you must be somebody that I will visit. That's what I would advise. But the truth of the matter is that it's your experience with them that is actually going to say who is the best stockbroker. Now, Bola Moses says, hi, good morning, Page Africa. Please, I want to know the impact of Naira appreciation on foreign stock for those that had to exchange to buy foreign stock. This is such a smart question, Bola. Thank you for that question. The effect is similar to what you are thinking. So if the Naira has appreciated against the dollar, then the value of the dollar that you had before you made the stock purchase is going to reduce, right? So you bought $1 for super hypothetical distance. So you bought $1 for 1,000. Now your $1 is in a $1 stock. But now $1 against the Naira is no longer 1,000, it's 500. So the value of that, your $1 stock, is now effectively 500 Naira, right? So the next thing that we need to be praying for, Bola, is that $1 stock you bought does a 2x. So it can become $2 so that you can start from where you stopped. Unless Naira appreciating against the dollar, it will actually have a negative effect on the foreign stock that you bought. Right. So Ayobami says, what's the difference between the NGX premium board and the NGX regular board? The regular board is the main board, right? So the premium board, there's just a specific list of, so I want to give a personal opinion on this, right? As an investor, as somebody that is buying stock from the market, right? The premium board and the main board, as an investor, as me, Louis Akoveso, I'm struggling to see what the difference is, right? Even though they've said, yeah, these premium guys, large market cap, good corporate governance structure, tested over time and decades, when I want to make an investment decision, the guys that are listed on the main board and on the premium board, I'm struggling to see what the difference is, right? That's my own honest opinion. There's an academic answer, corporate governance, market capitalization, that's the academic answer. But if this particular, difference may not affect, how we make investments in companies that are listed. Very smart question. Thank you so much, Arabam. Now, Iyobosa, I hope I don't say that wrong. How can people be added to join future webinars? So if we write, sorry, absolutely. So we'll just send an invite. So if you already have your email, we'll send you invites and you can join and then be able to derive value. So Anonymous says, can we use all these investments and fintech app to invest. Oh, you're asking about fintech apps, if you can use them to invest. What are you investing in? Are you investing in stocks, mutual funds, fixed deposits, forex, crypto, short to odds? It depends on what you're investing in. And I hope it's not short to odds, because I couldn't feel well on your behalf. It will end in tears. But there are some fintech apps that are really good, and that some even do like dollar investments. So far, so good, because Nigerians and trust. So far, so good. They've been okay. I would advise go to a stockbroker, use their own app to buy stocks. If it's another kind of investment, then you need to do due diligence on that. Akinloye says, I would love to know those companies that do not pay dividends. What is the reward of investing in them? Smart question. So, like we said, yeah, you can have the list of those companies that don't pay dividends, but the reward for investing in a company that does not pay dividends is the capital appreciation. A lot of those companies are doing so much work that the growth in the price of your stock over time is going to more than compensate for your lack of receiving dividends. So you bought something at 10 naira, now it's 1,000 naira. So if you had 10 million before, now you have 1 billion. That's very good capital appreciation and in like a 10-year period. And if that stock wasn't giving dividends, you'll still be all right? So some other people, they reinvest their earnings. So now they've made a profit, but they want to reinvest that profit into the business so that this capital appreciation can happen, right? So it's sort of a play between take a little here, lose a little there. But at the end of the day, the most important thing is capital appreciation is what is being targeted for high growth firms who do not pay dividends. And for established firms, they're going to pay dividends to you because they have the profit base to do that, and you can stay invested. Ajanaku says, I hope I'm pronouncing these names well. I remember having a CSCS account about 10 years ago, but has been inactive. Can I still use it if I have to, or do I have to open a new one? Yes, you can still use it. Go do your global search, you get your CSCS account number as well. So you can absolutely use that. If you do want to use a new one, you would have to then know that the stocks that you bought on that CSCS account are more or less like, so just go get the old CSCS account, do a global search with your name, and then you can then transfer to any stockbroker that you are interested in. Now, Success says, can you give us a list of some of the penny stocks to invest in Nigerian Stock Exchange? Absolutely. You can do a Google search to get this. You can go to investing.com to get this. But remember, what I said is a penny stock is my own, rule for penny stocks. And what I said was, any stock that is below 5 naira, I classify it as a penny stock. Some people say penny stocks are below 10 naira. And then where do you even draw the line? Because if it is dollars now, not naira, what's a penny stock, right? But I just, explained that, below 5 naira, that could be a penny stock. So go on Nigerian Stock Exchange, and then, there's a list of all the stocks. It's like a 7 to 10 minute exercise. Just tick off any of the stock that's below 5 naira. That's Louis' own definition of a penny stock, and then you can have those stocks and trade on them. Dabuki, okay, thank you so very much. Thank you so very much. We are really happy to have you here, and we're happy that you're taking active part in this webinar and helping us to achieve our goal of raising 100 USD millionaires in 55 African countries by 2043. Uluwole says he once bought. Okay, so I think he's repeating the question. So your stockbroker is the second one that you mentioned. Coronation, I'm sure, is most likely to register. So the people that you went to fill the form for your MTN share purchase, right? So it's most likely the second one. So it's not the registrar, it's the stockbroker. So remember, we had earlier spoken that as a company you want to list, you're also going to need a registrar. Now that registrar is for the company that is listing. For you that is buying, you need a stockbroker. That stockbroker is your seller in the marketplace. So the stockbroker helps you acquire the shares and sell them when you do not need them anymore. So go ahead and contact the stockbroker, not the registrar. Go ahead and contact the stockbroker for your shares. Rashidat says, hi, thank you for the insightful lecture. Do you have a community we can join? Absolutely. We do have a community we can join. So the thing is, for us, this is financial literacy. So they will definitely send a mail to you guys containing some of the answers to these questions that you're asking, but you can also support us on all our social media platforms. We are Beige Africa, so that's BEIGE Africa, right? Follow us on YouTube, follow us on Instagram, interact with us, comment on our stuff, send us messages. Somebody's looking for your trouble and saying something that you want clarification on, send us a DM. We're super responsive. Comment on our stuff. And then we also have a Telegram channel as well that will be sent across to the participants, so that you can also join and then get daily updates. So that's that. So also, I saw the final question from you, how to get started as a stock investor. So we already listed it. So make sure you get a stockbroker, do your research for the stockbroker. We'll send you the list of stockbrokers, call somebody there, and then get your CSS account opened, identify the stocks that you want to start investing in, and then you can quickly go into that. So now someone's success is, can you give us a list of some, okay, so this has been answered. How can we add people to future events? This has been answered. Okay, can I register and operate 2 brokers at a time? Edosa says this. Yes, you can. I always think it's better to have, except you're opening for your company, it's better to have everything in one place, but you actually can. You can register for 2 brokers at a time, and then nothing will happen, right? So I think that's the final question. And this brings us to the most interesting part, which is who was the first person to get the answer of the question that we asked earlier, which we said, when was the first worldwide market or stock market crash? If you said 2018, I'm sorry, you are wrong. 2018 is not the correct answer. That was not the first time that the stock market crashed. If you said 2008, you are also wrong. So sorry, 2008 is not the first time that the stock market crashed, but that crash of 2008 was very, very instrumental because we remember it like it was yesterday, some of us, and then, you know, it's something that happened. We can call it recent times, you know, like 20 years ago, maybe 16 years ago, when that happened. And I even heard very gory stories of that time, you know, where people that had hawked shares in several companies, some investment bankers, I heard that some of them even just walked into the, like literally walked into the lagoon and then committed suicide. And it was just a very sad time, you know, in investing history. But it is not the correct answer to this question. So I'm sure the guys are going to get me who actually won this, so that the third person, so what's the person's name? Pius O. Fabulous, fabulous, fabulous. So Pius O says 1929. That's correct. That's when the first organized stock market crash happened. Pius O is going to get 10,000 naira to guys, please, how do we know? So maybe Pius O, maybe you should send a private message to us. Send a private message to us with your email and your phone number, so that we can credit you this. And then if you already have a stockbroker, go ahead, you know, put your money in, let it start working for you. If you don't, please go open a stockbroking account with a reputable stockbroker. Let us be motivated about our investment journey. Congratulations to Pius O. And thank you so much to everybody who asked questions on this call. And if you have additional questions, you can please send us an email to hello@beige.africa. Hello, that's HELLO at beige, BIGE.Africa. Africa is spelled Africa. So let's send an email there. We are very excited to, you know, get your feedback on the event. We are going to do more financial literacy, more free financial literacy events, you know, for the financial literacy month of April. We're super excited to have you guys on board. Follow us across all social media platforms. And if you did not take anything out of this webinar, please take this. There is no wrong time to start investing, right? Just start. Monday like this, as office open. As you don't do some 1 or 2 work, fill out, find out. So you do your research over the weekend. Which stockbroker when I go use? Fill out, or you don't even need to leave the office. Send them an email. Some of them are responsive. Just start. Even if it's 5K, even if it's 50K, right? Get your information straight, do the research. We'll send you all the things that you need to, to do by email after this. But guys, please, the most important thing inside all this English that we have spoken, start an investment. And while it may not be stocks, while it could be mutual funds or commercial papers or whatever it is so important that you start something today. So thank you so much for your time. I remain Louis Professor. So see you on the next version of this our educative series. Sorry? Right. All right. Bye for now.